Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. And in this show, we bring you all the stories related to business policy and economy. With me once again, Suyash Maheshwari here in the studio. Suyash, good afternoon.
Good afternoon.
Let's quickly run our viewers through how the markets played up this afternoon.
Definitely, Shweta. Now, very interesting day for the markets overall. Now, Indian markets opened mildly positively in the morning session, and Nifty also rescaled the 19,200 sort of levels. However, it touched I think intraday high of 19,230, which was also the opening sort of levels for the index. After that, in the next hour or so, we saw a steep decline where Nifty gave up around 150 points or so. Then throughout the session, bulls tried to take the markets higher, and even managed to take it higher. By afternoon trade, we had reached at around 19,140 sort of levels, which incidentally was yesterday's close. But from there on, we saw a sharp decline in the last hour of trade, and the index made a low of around 19,056 sort of levels, and then also closed below that 19,100 mark, down about 0.32%. Sensex, on the other hand, also closed down about 0.34%, 0.37% actually, and closed below the 63,900 sort of levels. The action in the broader markets was mixed mostly. Nifty Midcap 100 posted decent gains of about 0.4% or so, but it's still below that 39,000 levels, which according to our experts, the experts that we have been talking to, will be a make or break level for the index going forward. Small cap, on the other hand, which had been resilient throughout last week, and had not really fallen as much as the headliners or the mid caps in the correction that we saw playing out last week, saw some decline. It closed on a flattish note, down about 0.06% at around 12,650 levels. Now, volatility, Shweta, saw a sharp spike today. India VIX was up almost 3% at close, and it settled at around 11.83 levels, but below that 12 mark, which indicates that even though the volatility is currently high, going forward we may see some sort of a decline in volatility overall.
But reaching that 12 mark.
Now, I mean, over the last couple of weeks, in fact, over the last month, we have been tracking three crucial factors. It was a bond yields, it was a crude prices, and it was a dollar index. Now, two factors worked in the favor of the bulls in India, and one factor, which was crude prices, disappointed street. Now, the dollar index eased by around 0.4% or so throughout the session, and it settled at around, I think it is currently hovering around 106, early 106 sort of levels. Bond yields, on the other hand, saw a dip of about 8 to 9 basis points, and the last time I checked, it was currently hovering around the 4.83% sort of levels. Now, crude, on the other hand, which had declined by about 3% or so in yesterday's session, bounced back, and it bounced back by about 1%, but it's around that $88-89 a barrel mark, which has been actually the average price for crude in the last 1 month or so. So overall, from a global standpoint, the cues are rather more or less what they have been in the last month or so.
So in line with expectations, more or less. Let's quickly get in Avinash Gorakshakar, who's joining us on the show from Profitmart Securities. Avinash, thank you very much for taking time out. Good to have you back. Run us through what's working here, in the markets. Lots of volatility throughout the day today. Some of these factors that we are tracking, what other factors apart from this are moving markets? And also, I mean, we can't carry this conversation forward without briefly also touching on FOMC meet, which is currently on in the US. Tomorrow, late into the night, we will be getting, getting to know the takeaways from that meeting. But before that, markets are quite jittery.
Yeah, I think good afternoon. See, I think markets are jittery largely because the FOMC minutes are going to be more important. The commentary from Mr. Powell is going to be more important. If it is a hawkish commentary, again, it obviously would mean that some comments on inflation would obviously mean how long these interest rates would continue. At least in the very near term, looking at the Israel-Hamas war, it doesn't look unlikely that interest rates are going to come down in a hurry. US has already stated that their inflation target is 2%, which is still pretty high. I would believe that in the Indian context now the markets are getting jittery largely because now November we are going to see 5 state elections. Yesterday, Jeffrey's market strategist Chris Woods mentioned that in case BJP loses even 2 states, that could mean a 25% correction in the market. So I think, markets are now getting jittery on the election side, which is quite obvious. And secondly, crude prices, despite the fact that they have now stabilized, I think any escalation in the war tension between Israel Hamas would obviously escalate crude oil prices, and thereafter, obviously elevate inflation numbers. So I think, clearly these are the kind of data points which the markets are closely observing. I would believe that, now it's going to be more of a stock specific approach. There are many mid-sized companies which have come out with very decent numbers. Some, positive surprises in terms of volume growth, in terms of the business commentary. So I think it's going to be a cherry picking exercise for some investors who want to take that risk and, buy at these odd levels. But from an index point of view, I would be surprised that the markets would stagnate for some more time here. It's going to be unlikely, with such a large amount of FI outflows seen in the markets. Indian investors are going to be in a wait and watch mode. Obviously, some cherry picking would happen, but I think on the broader market, it's going to be a wait and watch. Markets could remain volatile as well as, slightly underperform for some more time.
All right. So stock specific action is where our investors should be keeping an eye on.
Avinash, before we get on to the sectors and stocks that are obviously in focus, you pointed out this Jefferies report that was making rounds, early this morning. Now, I mean, a 25% correction if BJP is, BJP loses the general election going forward. What's your overall assessment? I mean, do you really agree with what Jefferies is saying and what Chris Wood is saying? Because Chris Wood, as we know, traditionally has been very bullish on India.
And, just to add to that, is there also past precedents that you can point to where BJP losing elections has had substantial impact, state elections specifically, has had substantial impact on the markets?
I think my guess is, I think this 25%, fall in the markets is a slightly over pessimistic number, largely because, last time when BJP lost the Karnataka state elections, the markets did not correct that significantly. Now the thinking by Chris Woods is that in case BJP loses two key elections, that is Rajasthan and Madhya Pradesh, then that could possibly trigger a big, kind of, letdown in the markets. I think, his point is partly right. The markets would definitely not like BJP to lose these two crucial states, but a 25% correction, Sujesh, is I think something which is largely very pessimistic. I don't think the markets are ready for this kind of panic sell-off. Considering the kind of SIP money which is also entering the markets, a lot of liquidity enhancement is there in the market which could take care of these kind of falls. So typically, I think it's going to be a wait and watch. So unless these events happen, these are purely statements which the market takes it and obviously reacts on these statements. It's unlikely to happen. My sense is it's going to take a long time. Maybe by the end of November we'll get a clearer picture.
All right. Also, it's important to point out for our viewers that these elections, state elections in 5 states, are a precursor to the national election. So it will determine mood of the nation, mood of the voters, and that could be one of the reasons why markets, if at all, will take a beating. If BJP loses, that's a big if.
I mean, Shweta, the markets hate uncertainty. It does not, I don't know how much it's, invested in which party wins the elections, but from what I understand, if there is a shift in the political regime, the markets would not like that.
So the balance of power changes.
Yes, but I agree with Avinash over there, 20 to 25% correction, a little pessimistic over here.
Okay, way too pessimistic perhaps, but let's also quickly take a look at some of the sectors that we are tracking.
Certainly. So, auto pack continued to be under pressure for the second straight session. It was the biggest laggard in today's trade, down about 0.67%. Another sector which was down was the Nifty pharma pack, lost about 0.62% in today's trade. Financial services and banking stocks also saw some bit of a correction. Nifty Bank, which had, was up about 800 points in the last couple of sessions, declined by about 0.45% in today's trade, and it has also slipped below that 43,000 mark, which was, considered a make or break level by a lot of analysts that we were talking to. Apart from that, the PSU banking pack, on the other hand, saw a bit of buying action over there, up about 0.14% or so. Realty was a clear outperformer today. We have seen the demand for housing properties, especially the luxury housing sector, going up, and we have also seen a good bit of run up in a lot of realty stocks. The results have also been largely good, so we are seeing that impact playing out. Nifty Realty pack was up about 1.3% in today's trade.
Realty is a story that's standing out. Avinash, I mean, looking at the growth in realty space, not just the number of luxury homes that are sold, but the realty stocks that have been doing consistently well now. What's your outlook on realty?
I think real estate companies should do better. In fact, most of the numbers which have come out from the larger players like Loda or typically DLF, Oberoi Realty, I think one thing is very clear that inventory sales have been very strong. Pre-sales have been at record highs, and most importantly, despite higher interest rates, inventories have been selling quite well. And most importantly, pockets like Mumbai, Gurgaon, typically these are places where price appreciation has also happened quite significantly. So I would believe that companies like DLF, Oberoi Realty, in north you have got smaller players like Anantraj, and as Suyash rightly pointed out, luxury sales have picked up significantly. Luxury sales have been high for almost all the key players, and that is something which is going to keep the profitability margins of these real estate players quite elevated. So I think outlook for the next 6 to 12 months looks quite promising. I would not be surprised that there could be a good amount of re-rating even from current levels.
All right.
Now, it reminds me of this article NYT, New York Times had published, a few years back, calling Noida the ghost town of India.
But that's not the case anymore.
Yeah, I mean, 5 to 6% year-on-year rise in property prices. The market clearly had, faced some troubles because of oversupply. But now we are seeing clear demand. I mean, I'm a house owner here in Noida, Shweta. On a daily basis, I get calls from realtors if I'm looking to rent out or sell my property.
Okay.
So clear demand picking up over there in the housing sector.
I'm not sure 5 to 6% is what you're looking at, because reports have suggested that 23 to 30% jump in property prices
and that's
over
across the
years
board
in at least metro cities and specifically Noida and Gurugram. Avinash, it's an interesting story. At one point about 5 to 7 years ago, we used to talk about Greater Noida as the ghost town. Now you have property prices jumping in by as much as 23 to 25%. It's a story of more and more people trying to be a home owner. What's the inventory looking like for real estate players at the moment, and not just luxury, but affordable segment as well?
I think, clearly Gurgaon is one belt where in the last 6 to 8 months prices have gone up by 30 to 40%. We have been talking to a lot of players here like DLF, Anantraj, and most of the commentary which is coming in from these management is that prices are going to stay elevated for some more time. Supplies are definitely less than demand, and I think genuine demand is coming. In fact, not only luxury plots are selling, luxury houses are selling, villas are selling, but typically, there are a lot of interest for even affordable housing. Like Anantraj has launched a new affordable housing project. So I think clearly across categories, the demand is strong. And I think this is genuine demand. This is not just investor demand. So my sense is, I think clearly after a lull of almost 10 years in the real estate market, the bounce back has come in. And whenever such bounce back comes in, Shweta, I think at least for the next 2 to 3 years, demand continues to remain elevated. So at least as of now, there are no near-term signs of any saturation, especially in the northern side of the market. In Mumbai also, if you see the numbers of Oberoi Realty, pre-sales have been at record levels. Execution continues to be very rock solid, and there are a lot of new projects which the company has planned. So typically,
Right.
Bombay and Gurgaon are definitely markets which should do well even in future.
So less supply, more demand. Demand continues to rise there, Suyash.
Yes. Avinash, I also want to touch on the FMCG pack. I mean, a lot of consumer staple companies have come out with their Q2 earnings, like the likes of Dabur, HUL, ITC and so on. There's a clear trend that is emerging that we have seen, margin expansion on the back of, softening of commodity prices, especially crude and all. But this has also had an, unintended consequence for these companies, as it has also marked the re-entry of smaller regional players into the market, which is, by the way, as pointed out by HUL, is eating away from their market share. How big of a concern should it be for investors going forward?
No, I think clearly, volume growth and margin improvement are two criteria which, obviously everybody looks at FMCG companies. But I think you're right in saying that in this quarter, most of the company managements have commented that profit margins have come under pressure. Some sort of market share loss has happened because of entry of smaller regional players. So I think, it clearly shows that there are pockets of opportunity for smaller players. The larger players are finding it difficult to generate volume growth, and obviously because of product fatigue or maybe lack of new product launches. But I think clearly the kind of growth which was expected from the rural markets, Suyash, has not yet come in. I think even companies like ITC or for that reason Dabur, Hindustan Lever have commented that the rural market has grown much slower than what they had anticipated. So I think we'll have to wait and watch for the second half. Obviously, the festive quarter looks like should be do well, but hopefully, I think if the volume growth picks up, then I think even if the margin pressure is there, that could make up for the margin loss. But I think we'll have to wait for a couple of quarters to see this trend emerging.
You know, it's interesting you pointed out at the growth of smaller regional players, because Domino's just about a couple of weeks ago cut prices of its pizza by 50% because they were losing market owing to smaller pizza shops appearing in the neighborhood. So it is hurting the business of big players, come to think of it.
But I mean, if you look at the overall India story, it's good, right? Larger
More competition.
More competition, and smaller players are like challenging the likes of, a Domino's or an HUL for that for that market share. So I think it's overall for India, the India story, it's a good news.
Absolutely.
Another sector that I want to touch on, Avinash, is the auto sector. A clear outperformer, through 2023, but we have seen some bit of weakness set in the last few sessions or so. What's the reason for this underperformance, sir?
No, I think clearly, the underperformance is largely for segments like tractors or typically farm equipment, because I think after Mahindra and Mahindra Finance posted its numbers, clearly the commentary from the management was that collections have been pretty slow. And that was the reason, delinquencies had picked up, the profitability had come down significantly. I think broadly, Suyash, if you look at the passenger car market, Maruti came out with a pretty good set of numbers. Commercial vehicles are doing well. So I think the commercial and the passenger car segments are probably places where one could see a stronger growth. Two-wheeler markets are yet are not into the real kind of forceful momentum, because competition is very tough. Most importantly, I would still say that maybe the farm equipment players like Mahindra could possibly face some challenge. So I think it's not that every segment is going to underperform. We are seeing a GDP growth of 6.5%. So typically in these kind of macro scenarios, auto sector is the sector which turns out to deliver the best numbers. So I think it's going to be a little bit of consolidation, and I would expect the third and the fourth quarter should also be reasonably good. I think it's just a little bit of profit booking today that you have seen on the markets.
Now, Avinash, I mean, geopolitical uncertainties that are playing out have helped gold prices. I think in October alone, the gold prices, spot gold is up about 8% or so. But there was a report coming out today which suggested that gold demand across the globe has in fact dropped by about 6% in the September quarter of this year. Now, given the precarious economic conditions in the market, with Europe possibly slipping into recession, do you expect yellow metal to come under pressure from here on?
No, I think my guess is the gold, the prices depend on a lot of factors apart from the demand supply. What kind of central bank buying goes into gold. That is also a very critical variable. And, there are some challenges in the sense that, normally when there are some crises happening, that is the time when gold is used as an asset largely to hedge your risk. So I think, in terms of the upside for gold, that would be limited. And I think clearly, as of now, we don't see any kind of major kind of crisis breakdowns in any part of the globe. So I think apart from the Israel-Hamas war, and most importantly, central banks still have not commented on their buying kind of strategy for gold. I would believe that, you would probably have to wait for a couple of months before we get a clear indication of the yellow metal price, whether it goes up or goes down. Normally during the festive quarter, especially in India, gold prices do rise because of a good amount of demand, in this kind of quarter. But overall, I think in terms of the risk upside, I would still believe that gold is not a productive asset which is going to deliver some outperformance which is far better than the equity market. So I think it's going to be volatile in the near term, but longer term, it's again going to settle down.
Is that one of the reasons why while September demand has been low on the back of the fact that gold prices have been in fact very high owing to festivities here? Are people taking a precarious view of not buying too much of what is too expensive?
Yeah, I think clearly now, people have become more smarter. I think instead of buying a gold coin or typically a gold ornament, I think people normally have realized that it's always better to buy an ETF or maybe, some sort of a digital asset. That is one change which is happening. And most importantly, when gold prices shoot up, obviously it impacts demand immediately. So I think, local demand has also obviously got impacted partially.
Right.
We'll have to see, wait and watch to, see the movements.
Sir, I also want to touch on silver prices. Now, at a time of uncertainty, at least in the last 2-3 years, we have seen that gold and silver prices typically move in the same direction, and silver rather has outperformed in the last 2 to 3 years. But given the kind of uncertainties that we are seeing, especially with the lack of growth, lack of demand coming from China, Europe slipping into recession, and knowing the fact that silver has a lot of industrial use, do you expect silver to underperform gold?
I think, see, my guess is, silver is rightly, as you mentioned, it's a large percentage of silver is used for industrial purposes. And I think if there is a major slowdown in China or Europe, typically that is definitely going to cut down, demand. And obviously, if the demand is low, the prices are going to be lower. Gold is always a premium asset, Suyash. So I think silver follows gold. So if there is a correction in gold, obviously, I would not be surprised that silver also would see a further downfall. But at least at the near term, it doesn't look that silver is going to see any panic sell-off. But yes, industrial consumption is a key barometer. If there is some cutback in global demand for silver from industrial users, then that could impact silver prices negatively.
All right, Avinash, stay with us. Let's also take a quick look at some of the stocks that we are tracking. Let's begin with Bharti Airtel first. Bharti Airtel all set to come up with its Q2 numbers that will be closely eyed by not just telecom operators but also general public.
Yes, Shweta, a muted quarter is expected, at least that's what the street is anticipating from Bharti Airtel. Revenue is expected to jump about 10% or so on a year-on-year basis, whereas because of delays in tariff hikes, we may see a dip in profitability. Profit, as per analyst estimates, is expected to dip somewhere between 10 to 30%. Now, there are a few, of course, metrics that we closely track, which is the ARPU, average revenue per user. That is expected to jump about 2% or so on a quarter-on-quarter basis and come in at around 203 to 204 rupees. Subscriber base will also be keenly eyed. How many subscribers did Bharti Airtel added in the September quarter? At least from the street's expectation, I think 4 million to 5 million subscribers are expected to be added. We saw the results from the Africa business of Bharti Airtel. We saw a decline on both revenue and profitability front, but that was not because of operational issues. That was actually because of a depreciation of the Nigerian currency. So overall, a muted quarter is expected, but I'm looking at the stock also. The stock did end about lower in today's session, but the overall brokerage calls on Bharti Airtel, there are three domestic brokerages that expect the stock to climb above that 1,000 sort of levels, in the next couple of months or so. And in fact, I think Bharti Airtel ended slightly lower today. It was down about 0.88 or 0.9% or so in today's trade. But overall, it has been an outperformer this year.
All right, Avinash, not a great result expected there as far as Q2 numbers from Bharti Airtel is concerned. ARPU is not likely to go up as much as expected, and there is going to be a dip in subscriber base as well. With Jio's foray, it appears that the entire telecom sector has been challenged in a way.
Jio has added 11 million subscribers or so. Bharti is expected to add around 4 million subscribers. Jio's ARPU,
the numbers are very skewed.
Yeah, 4%, and Bharti's ARPU is expected to only rise by 2%.
Avinash?
I think my sense is, I think the numbers are definitely going to be, quite, disappointing. But I think what is important is the management commentary on the 5G rollout, any new kind of products which they launch. And I think the market should obviously be looking at the kind of growth in subscriber base, because that is clearly a key indicator. The ARPUs are also expected, I think, probably in the second half to stabilize or get little better, because a fair amount of pricing power has again come in the market. But if Reliance Jio gets more aggressive, then I think it's going to impact the subscriber base of both the players. Vodafone is a gone case, but if you look at Bharti, any loss in subscriber base would definitely be viewed negatively. So I think we have a hold on the stock. We would look at the commentary, once the numbers come out tomorrow.
All right, numbers expected today. We will, of course, keep tracking those numbers. But before we let you go, Avinash, let's also take a look at some of the top gainers and losers on Dalal Street today.
Now, let's talk about gainers first, Shweta, as always. SBI Life Insurance was a top gainer in today's trade. The stock was up about 3.3% or so. In fact, the stock has extended its rally to 2 sessions now. The overall volumes in the stock was also pretty high. I think, about 20 lakh shares changed hands in today's trade, whereas the 1 week averages of about 10 lakh shares or so. Titan was another stock which was in the green, in fact, among the top gainers. in the Nifty pack, up about 2.5%. Now the stock overall has been on a bit of a skid this month. However, we are seeing some bit of a reversal taking place in the last 1 week or so. The stock is actually now, after that a muted start to the month, it's actually on a 3-day winning run. And I think the expectation is that, Titan results are going to come out, I think, on Friday. And it's expected to post a good set of numbers. That's why we are seeing this run up in the stock price. HDFC Life Insurance, another insurance company which featured in the list of top gainers, the stock jumped about 2%, over 2% actually, after it positively surprised the street as far as its September quarter report card is concerned. Net profit for the quarter jumped about 15% on a year-on-year basis. The street was factoring a growth of about 10 to 12% as far as net profit is concerned. The other two stocks among the top gainers was Kotak Mahindra, up about 1.08%, and Asian Paints, which also added 1.08%. Now among losers was Mahindra & Mahindra. Sun Pharma was a top loser today. Sun Pharma dropped on the back, ahead of its Q2 report card. The numbers are expected to come out anytime soon. Expectation from the street is that US sales could be softer, and that could weigh on the stock prices going forward.
Right.
Also, we are seeing a correction play out in pharma stocks. It was among the top losing sectors today. So perhaps that's also adding to the weakness. Coming to Mahindra & Mahindra, the stock was down about 2% or so. It's the second straight day where the stock is seeing a bit of a dip. Now we are also seeing a broader dip in the auto pack, so perhaps that's why we are also seeing Mahindra & Mahindra taking a beating in today's trade. Eicher Motors, another auto stock which was down today, down about 1.8%. LTI, ONGC were other losers, down about 1.5% in today's trade.
All right, that is as far as top losers and gainers is concerned. Avinash, Gorakshakar, thank you very much, sir, for taking time out. Thank you for speaking to News 9. To you too, Suyash. Thank you for being here today.